Somewhere around $250 is an invisible glass ceiling for Solana. Once we hit $250, we tend to go down by 30%, by 50%, even by more than 90%. The question is there potentially the chance that this will change in the future? Let's have a look at the on-chain metrics. Let's try to figure out where the price is headed. Let's look at the data most people are not considering. Now here's that glass ceiling that I'm talking about. It's not a perfect price level, as in sometimes we turn around at $260. Maybe we temporarily even shoot up to close to $300. But we have seen multiple corrections afterwards of 30 or 50 or more than 90%. And so just recently we hit that glass ceiling one more time. Now, if you've been following this channel for a while, you know that I do not like US dollar charts like this because there is a macro impact, as in when Bitcoin goes up, then most altcoins go up as well. When Bitcoin goes down, most altcoins go down as well. So US dollar charts only show part of the story, and they don't really necessarily tell us what's behind a particular asset. That's why I like to look at things like this here. This is the Solana market cap relative to the Bitcoin market cap. And now the tops tend to align much better even compared to the US dollar chart. Once Solana's market cap equates to roughly 7% of Bitcoin's market cap, we have our glass ceiling. And it seems like recently Bitcoin tends to outperform even more. The recent turnaround happened earlier than that. We see something very similar for Solana relative to Ethereum. The answer is, of course, the ETFs and the treasury companies. So here is the stacked ETH held by different public companies. Here is the Ethereum ETF supply over time. Here is the stacked Bitcoin of treasury companies over time, and here is the ETF balance over time. So there are certain entities on Wall Street that tend to just accumulate Bitcoin and Ethereum. They tend to just be net buyers. They tend to not really sell, thus reducing the circulating supply, thus helping Bitcoin and Ethereum to outperform the rest of the market. And Solana doesn't really have that luxury, at least on a broader scale. There's, for example, no BlackRock Solana ETF. Now, you see over here, that's the Solana dominance, as in how much percent of all of crypto is currently in Solana. And this also tends to trade in a somewhat constant range. The upper end is 3.8%, the lower end is 2.2%. We recently turned around again, and currently the momentum is bearish. And if history is any indication, and the last 1.5 to 2 years are representative of the trading range, Solana could potentially underperform by another 24% from here. But would an underperformance like this actually be fundamentally justified? Because the capital that's on Solana is very close to an all-time high. Here we've got the DeFi summer, then subsequently the Terra Luna collapse, where then also FTX went belly up, and so the TVL on Solana moved from 10 billion all the way down to 200 million. And then it recovered again with the overall crypto expansion, but also with the rise of Memecoin trading on the Solana chain. Now, in isolation, this chart looks okay, but it is measured again in US dollars. And to really get an idea of how much decentralized finance on Solana is used, it's better to measure this in Solana tokens, in SOL, not in US dollars. Because then we get the actual adoption. We do not just get price fluctuation. And then we get this chart here. This is now the total value locked in SOL. And this is just going sideways for the last 6 months. The risk seems much higher than the potential reward, which would justify Solana potentially underperforming the rest of crypto. Here we've got the number of transactions on Solana over time. This doesn't look too bad. There's not too much growth here, but at least it's constant. But here we've got the number of active addresses. And so the number of transactions doesn't really move much, but the number of addresses is going down. This tells us that the currently active addresses tend to transact more and more. Now, is this organic or is this manipulation? That's the big question. I tend to believe it's actually more manipulation. And that again comes from the pump.fun ecosystem. So from the Memecoin launchpad on Solana. In the last 24 hours, we saw 8.4 billion with a B of trading volume on the entire Solana chain. On pump.swap, we saw at the same time 6.4 billion of trading volume. So the vast majority of trading volume happens on pump.swap. And I am not convinced that this is all organic retail trading. Because in theory, with all of this trading combined with the fee burning mechanism, we should actually see the pump token itself going up. So swapping on pump.swap, of course, also generates fees. And those fees are used to buy back the pump token. In total now, 114 million worth of pump had been bought. Yet the pump token itself recently is selling off. How is this possible? That pump is going down that much when it gets continuously purchased through this buyback program. I'm not so sure. The data seems to not really add up. The only thing I see is less and less active addresses, and I see negative momentum. I really do not like this trend here. I don't like that the number of active addresses went from 6 million down to 2 million in the span of a bit under a year. And I also don't like the potential risk in Solana relative to the reward, relative to this everlasting long-term glass ceiling. It's very, very hard for Solana to ever consistently break the $250 mark. The asset is incredibly pro-cyclical. It can crash by more than 95% in the worst case. And we have seen similar crashes with other cryptocurrencies in the past, right? We've got the Cardano crash. This was 94% over here. And subsequently, we went down again by 92%. So getting into Solana now is by no means risk-free. Even buying the bottom at 2.2% dominance is potentially quite risky because we don't know if the retail investors will come back. I want to see how the number of active addresses is increasing again. Only then do I believe the hype. Now, isn't it fascinating how the asset selection itself seems to be rather a secondary problem, as in there are market phases where everything is going down at the same time. And then there are other market phases where most altcoins tend to go up. There's just so much correlation within crypto. What we see in green, that's the market cap of the altcoins that are not in the top 10. What we see in orange is the market cap of Bitcoin. What we see in blue is the market cap of Ethereum. So this is just relative performances over time. They all go up and go down at the same time. Now, what's important to note here, though, that this is a comparison of market caps. It's not a comparison of prices, because actually the small altcoins tend to perform much worse than the market cap implies. This here is the performance of the smaller altcoins, so from rank 800 to 900 in the last year. There are a few outperformers. So there's 1, 2, 3, maybe 4 altcoins that did roughly 100% and a bit more. Now, why am I talking about the 100% cutoff? Because that's how much Bitcoin made in the last year. So that should be our benchmark. All the altcoins that did not return 100% in the last year did much worse. And that's obviously the vast majority. We are seeing here 100 alts and only 4 did better than BTC. So really, trading altcoins is incredibly risky. Now, why do the altcoins perform that poorly? It's because of tokenomics, or in other words, the supply of many altcoins grows very quickly, much faster than the demand, which then depresses the price. There's all kinds of different flavors of token inflation. There's the constant inflation, like over here for ApeCoin. There is the cliff unlocks, as over here with 1inch. Or there's a mixture of both. We've got constant expansion plus cliff unlocks. That's now here as an example, XE Infinity. And so because of that increasing supply, just holding a broad basket of altcoins is a very bad idea. This is a good idea in the stock market. It's not so good of an idea in crypto. Have a look at what happens with most altcoins. This is ApeCoin over time. This is 1inch over time. And here is XE Infinity over time. When the supply grows constantly, the price tends to go down because the demand has a very hard time catching up. And so I personally generate my alpha, my outperformance over buying and holding Bitcoin with exactly that strategy. I still like to hold Bitcoin, but at the same time, I'm also betting on falling prices of especially the weaker altcoins that expand quickly in supply. I made many videos on the topic, but actually you don't have to watch all of this. Just have a look at what kind of outperformance can be achieved. What we see here in orange, that's Bitcoin. And what we see in green, that's going long Bitcoin and short ApeCoin at the same time. So we're betting on falling prices of ApeCoin. At the same time, we're betting on rising prices of Bitcoin. And then we get this nice performance, which is way, way steeper compared to what just buying and holding Bitcoin provides. Here's Bitcoin versus 1 inch. So again, massive outperformance, 4,400%, while just buying and holding Bitcoin during the same time period returned less than 400%. And over here, we've got Bitcoin relative to Axie Infinity. Now, this is just a few examples. I'm actually following this strategy already for the last 4 years. And had I just dollar cost averaged into Bitcoin, I would have gotten this performance here in light gray. But because I also bet on falling prices of highly inflationary altcoins, I got the performance here in black. Now, very often, the first reaction that I get when I describe this strategy is that this is too complicated. Just tell us the next big altcoin that makes a 10 or 100x and everything is fine. But I don't think it is. Because again, just have a look at these smaller altcoins in the last year. There is a 90+% likelihood that you're going to do worse than Bitcoin. And even if you pick an altcoin that's doing better, once you diversify a little bit, the portfolio is likely going to go down. Again, because the insiders constantly cash out and dump on the average retail investor. This is an unpopular story within crypto because it doesn't sell as well, right? Most influencers, they actually get paid by the crypto project in order to promote the project. And so they just say this is the next 10 or the next 100x altcoin. And then of course the insiders, they dump on retail, the altcoin actually crashes and does not do the 10 or 100x. And so I just like constant outperformance over trying to find the one lottery ticket. Now, in the end, it's actually not that complicated to set up those relative valuation trades. There are only 2 videos that you have to watch. Here's the first video using perpetual futures on Hyperliquid. And here is the second video, risk management with relative valuation bets. Once you've watched those 2 videos, which is in total 1 hour of content, then you know exactly what to do in order to get this performance or this performance or this performance. After you've watched those 2 videos, I will share my favorite trade with you. And those favorite trades have still a lot of token inflation ahead. The 3 examples that we looked at, they have already inflated. Most of the supply is already circulating. But my favorite trade still has a lot of token dilution in front of it. So it's likely going to continue to underperform. I'm so confident in that particular trade that in case you do not make money with that trade after holding it for 1 month, then I will refund the premium membership fee to you. So you don't pay anything for premium if that trade doesn't make you money. So the whole idea is that premium pays for itself. You sign up, you watch 2 videos, you open the favorite trade. And again, if you don't make money with that trade, you will get the $125 back. No questions asked. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.